Happy Friday, traders. It is 8:01 a.m. Chicago time on the 12th of July, 2019. This is episode number 1554 of our Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Hopefully, you can hear me nice and clear. This morning, the market is, the indices are actually gapping up slightly on the S&P and so on. Allocations to risk this morning, just slightly. Nothing really fantastic. The leader today is the Dow up 76 points or 0.28%, followed by the Russell 4.4 points higher. Up 0.28% as well. The S&P 500 up 6.5 points, 0.22%. The laggard today is the bonds. The U.S. bonds are down 13 ticks in the futures, or 0.24% from settlement. The Bund, the Euro, and the 10 years. Crude oil is unchanged, completely sideways. Nothing further to price in. It is likely to revert back to $60 and test below before establishing a base for the next leg up, or if news allows it, it could fail back down depending on this Britain-Iran situation. Now it seems like everybody's provoking everybody. So that's where we are today. In terms of sentiment, the S&P could not push much lower than where we closed yesterday, and again is pushing higher into the 3K territory. In terms of what's ahead, well, in terms of news, actually, there just isn't much to talk about here. European indices rebound from lows as Daimler issues profit warning. And other than that, there's really not all that much to talk about. China's trade surplus beats forecasts as May and year-to-date surplus with the U.S. continues to widen. As in terms of what is ahead of us, we did get U.S. PPI. US PPI month on month came in slightly higher, 0.1% versus zero. No reaction. The core is in line. Core PPI month on month is slightly higher, 0.3 versus 0.2. There are no more figures or anything like that. There's just Fed's Evans speaking at about 10 o'clock Eastern, and that's it. It is Friday, and it is summer. It's likely, the overnight session, even though we're higher, the overnight session is really not all that active. I'm anticipating today to be a quiet and low volatility day. We've made a lot of strides to the buy side, and it's likely to be a rest day. Notice that the S&P is firmly grounded above 3,000 now. We'll go over that in a minute. In terms of what was expected versus what we got, yesterday's main expectation is a choppy open that drops. Now, we had a weak high on the overnight, which was never tested. But the main idea yesterday was it is likely to revert back to that point of control. We're opening in range out of value, and there's a strong propensity for the market to move into the value area, which I designated with a bracket right here. This green bracket shows the value area of the prior day. So the expectation is we're likely to move down into the point of control and test the other side of value, this black area right here. That was the key expectation. Here's what we actually got. I'll show you this on the trigger chart because there wasn't that much action. Yesterday, we had a choppy open, just as expected. We did make an attempt at that high, the overnight high, and couldn't quite get there. And lo and behold, here we go. We move back into the point of control. We have responsive action. And then it looks like we're done from the VPOC. We're done, and we start to rotate up, and we may actually go neutral. We broke the IB low to test the point of control, and we may go neutral by taking out the 3,006 and a quarter and start challenging 3,007 and a quarter. And then one of these Fed speakers said something. I don't remember what it was, and we just rolled over. And where do we go? We go to that value low. Remember the bottom of the black area right here. We poke below. We have our one of the biggest impulses up, and then we have a continuation up, and we end up dragging the we drag from one day to the next. We end up dragging the point of control higher on an inside day, and we've closed firmly inside of the 3,000 millennium figure. And what I wrote yesterday in the Convergent chat room at the end of the day, let me pull that up, just as a kind of a summary of what the day looked like. I said a few things to note about the ES. It recovered back to its DVPOC, the developing VPOC, on the session at 3,003.5. It shifted developing VPOC higher and above 3,000 for the first time ever. The rally into the close is incomplete with some strong participation by very large lots. I'll show you that here in a minute. You can look at it. You can see that the very large lots really squeezing higher, and the gap below remains unfilled. What's the conclusion based on that? Prices aren't high enough to create an excess high on the daily and to show us that sellers are motivated, hence expecting us to visit 3,014 at some point tomorrow, the next likely test area. So I put that in there at 4:39 Central yesterday after the close as a recap. And we did drift higher in the overnight session. And the expectation is we're likely to test a 3,014.75 measured move. Here's what we've done since the market closed yesterday. This is the overnight session. We opened sideways, not much action at all, hardly any volume. We get a push on the release from China or from Japan, I think. Cap utilization was much, much stronger than expected out of Japan. And then we hold sideways in what looks like the same thing as we saw in yesterday's extended trading hours. Okay. And so here we are. We have another one that looks like that. So yesterday I was fairly confident with this double top up here, fairly confident that we were likely to at least poke higher, and there was just, I was completely wrong there, and that happens. But today we are opening above the prior range, the range of the last 2 days. Remember, 3,750 was the all-time high. Yesterday we put in 3,006 and a quarter. We're gapping above that. The point of control is near highs, and the market has not given up any territory below the mid and is really set to squeeze. Given the context of where we are here and what we're doing, the expectation is that we're likely to continue to squeeze higher as we are accepting these higher prices. Let's take a look at what we're expecting for today. Before that, I want to remind you, as I do every Friday, to hit the like button. It's really important to hit the like button. It makes the channel easier to find, easier for others to find. And so hit the like button, find it on YouTube, and please click like. What are we expecting for today? I'm going to make this very brief. The primary expectation for today is, again, low volatility, low range, low risk grind up. Open auction out of range, expecting somewhat of a responsive attempt, but overall, I'm not looking for any impulses. I'm looking for this kind of action today into that 3014 and then potentially the 3017. And the reason I think 3017 is in play is simply because of daily ranges. If we don't get into the prior day's range, We're expecting at least 9.5 points. That puts us around in the area of 3017. That's your primary scenario. Expecting this to be, don't want to jinx your day, but I'm expecting this to be a slow, grindy, frustrating, hard to telegraph, hard to read kind of day. So take it easy today. It's not a good day to push because Fridays tend to be more a drift up type of trade. And again, combined with the summer, we're getting into the depth of the summer. Hey, we're already almost in the middle of July, believe it or not. Seems like July just started. We're on July 12th, almost in the center of it. And so the expectation is that there's likely to be less and less participation. Yesterday's volume was only 922,000 in the pit, which is okay. It's about 200,000 less than what we would consider to be normal. The secondary scenario squeezes above the overnight high, tests this 14, and then we start to see sellers coming in, and we start to move back into the range. I'm expecting a test of 3003 from 14 and a small attempt below it, but overall, I'm expecting it to hold once it does that. Okay, there aren't a lot of high risk there aren't a lot of high risk events for the weekend. The Trump administration is taking kind of a backseat approach to the China issue, and there isn't much chatter. There's some chatter between the UK and Iran. The UK is claiming that Iran attacked a tanker, and there's some contention there. No surprise there. There's also some tension, trade tension between Japan and South Korea this morning. They are doing a tit for tat, but I don't expect those to be actionable events or events that would change the valuation of the S&P 500 today. So we'll see. Now, caveat emptor. I've said before that as I'm expecting a quiet, grindy day, and we end up with a blasting, ripping kind of day, but that doesn't happen in general. That doesn't happen on technicals. It happens on news. It happens because something somewhere happened, and the market has to reprice, and that could be Powell waking up on the wrong side of the bed, or POTUS tweeting something. Who knows? But if all else being equal, knowing that there are no significant events on the calendar, these are the two scenarios that are expected. Again, please hit the like button, and I'll catch you on Monday. Take it easy today. It's not a good day to push hard. Take care.